if we see that SPX is in a significant downtrending market, I'm talking significant, then we understand that it's way better to play off continuations rather than trying to catch the bottom, right? Catch the falling knife. So we see a 1 hour OB here, and price starts to have a bit of a counter trend from a low to a high to a higher low to a higher high. New York opened at 9,930. We're going to see how price goes from a low to a high and goes ahead, retraces with the wick, sweeping internal liquidity, but also respects the low to create a higher low. Now, what I noticed after New York opened is we started to go ahead and build up an accumulation schematic over within the 786, 886 fib low retracement. And it was pretty awesome to see how we go from a downtrending market to our first hint of a bullish market by seeing a shift. We go from a high to a low, high, low, high, low, shift to the upside. Well, where was our last point? Here was the last candle that respected the previous high before market then retraced and broke above higher. So I wanted to go ahead and utilize this candle as not only our entry, but our stop loss exit. What does price go ahead and do? We get dropped back in, retrace, inactivo, but price goes ahead and disrespects it. Now, this is okay because if we are playing a Wyckoff schematic, we understand we have to go from a low to a higher low, then a shift above to confirm that this market is now shifting above, and now we have a higher probability playing within our favor. So look what happens here. Price goes ahead, where we create that higher low, that last point of support, LPSY. And price then goes ahead, breaks above, creates another higher low, breaks above again. Huge shift of momentum with this bullish candle. Imbalance, right? Bit of a last breaker box to the downside. So we're going to go ahead and enter on the wick. Stop loss just below the low. And price goes ahead, bit of a retracement in, and then we start to play off. So now this play was about 3.7 to 1, making up for this previous play, right? So all around about a 2 to 1 does play out, but a retracement, cool. And so look what happens here. Now we go ahead and buy into the 1 hour OB, which we understand could shift us back to the bear side since we bought the counter trend, and now we can play back into the overall trend. And notice what happens here on the 5-minute. Price now goes ahead and starts placing into a distribution. I'm going to delete this to make it a little more clear. We start building into a distribution schematic for Wyckoff, going from a BC, AR, ST, SAL, UT, high, low, high, higher low into a higher high. So we need to see a shift to the downside, breaking below the low that created our high. So now we go from a high to a low. We should go ahead and create a lower high to continue to lower low, since this is the 1 hour OB to push us back lower. And this would be considered our lower time frame breaker structure back to overall trend. And that's exactly what happens here. Price goes ahead, retraces not only to our 5-minute imbalance, but our 5-minute order block, playing off of the body, stop loss just above the high. And we're going to be aiming, since we went ahead and retraced into the 1 hour OB, we're going to go ahead and play the 1 hour order flow from a high to a low to a lower high into a lower low, sweeping below the lows. Price gives us a 5-minute confirmation, lower time frame breaker structure confirmation, and we go ahead and play it out for an 8.5 to 1. So all around great counter trend into overall trend, ping pong utilizing the Wyckoff schematic.